As the business cycle picks up, that's alt season. Now, why is that? It's pretty simple, because everyone has a bit more money.
Yeah.
Because as soon as the ISM picks up, still below below 50. So it actually says a big part of the economy is still slow, and another part is racing ahead. So that means that corporate earnings are still slow. That means people's paychecks are slow. That means the bloke who owns the sandwich shop down the road, earnings are still a bit slow. All of that stuff.
Mm-hmm.
When it starts picking up, that compounding effect of the business cycle means more disposable income, means more investing, and then people go out the risk curve. So we still haven't got to that point. So we're still, and that's another reason maybe this whole breakout from the banana zone hasn't happened, is it really happens when the RSM crosses 50 to the upside. That's like a big signal.
Raoul delves into how economic cycles shape crypto investment trends. He explains that a rising ISM index above 50 is a key signal for alt season. During economic expansion, people experience higher disposable incomes, fueling investments in riskier assets, including cryptocurrencies. He points out that currently economic growth remains uneven, with some sectors slowing down while others are gaining momentum. However, the onset of stronger growth will likely trigger a surge in speculative assets, including meme coins. Historically, each cycle brings new entrants, driven by the fear of missing out as they witness others making significant gains. This behavior mirrors previous bull runs, where speculative manias like ICO attracted waves of new traders.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
ETH, I've been thinking through what happened with ETH. So the layer 2s obviously took away from the layer 1. Okay, fine. But what I'm thinking is really being built is something that scales much larger by having the layer 2s, and then they're going to go to this ZK rollups, whatever it's going to be. But they have a roadmap, and I think basically they've overbuilt infrastructure for where we are right now. And that's what it is. While Solana and Sui and other stuff are seeing the pickup in activity, ETH has basically built out enormous amount of block space. And as the market grows, I think, ETH, because it's security and all of the other stuff, will attract more flows. But it's probably going to underperform this cycle. Underperform Solana, but I still think it outperforms Bitcoin. I look at that cross a lot. That cross perfectly works with the ISM. So as the business cycle picks up, that's alt season. Now, why is that? It's pretty simple, because everyone has a bit more money.
Yeah.
Because as soon as the ISM picks up, still below below 50. So it actually says a big part of the economy is still slow, and another part is racing ahead. So that means that corporate earnings are still slow. That means people's paychecks are slow. That means the bloke who owns the sandwich shop down the road, earnings are still a bit slow. All of that stuff. When it starts picking up, that compounding effect of the business cycle means more disposable income, means more investing, and then people go out the risk curve. So we still haven't got to that point. So we're still, and that's another reason maybe this whole breakout from the banana zone hasn't happened, is it really happens when the RSM crosses 50 to the upside. That's like a big signal. The world is so indebted dollars that dollars always in short supply.
Yeah.
So anytime the world slows down, the dollar goes up. Anytime, it's just, there is a desperate need for dollars. I mean, what happened to China? They needed dollars. What the US did was agree via Japan intervening in the currency to inject dollars back into the Chinese system.
Yeah.
So I don't think that they need to do anything. And the argument, look at the size of the debt. No shit, Sherlock. We know what they're doing. They're debasing the currency to pay for the debt.
Yeah.
That's the privilege of having the world's reserve currency. You could force an 8% annual purchasing power depreciation via debasement, which is basically, I think of it as a put option on implosion. So I don't know what you'd pay for the option, a put option on, let's say, equity markets falling 50% plus and most markets falling apart. That's what, if you get the big reset, the big, thing. Okay, that's what happens. Well, what we're doing instead is we're basically paying them to take away that downside. And as volatility comes down, it just becomes super attractive in this kind of stuff. I trade a bit of options, not a lot, but I trade them on Dara a bit, obviously. But yeah, I mean, look, everything is in place. The only thing that we were talking about this earlier, Dave and I, was like, the concern is we all think it's likely to break to the upside and go fast. And the issue is where is the capital flow going to come from? So if we're stepping away and want to give ourselves a counter argument, is everybody's looking at each other to say, well, when it breaks, the market's going to go higher because it's going to bring in all of the FOMO. But it needs to break higher to bring in the FOMO.
That's right.
That reflexive thing needs to start. And every time it's got to the top of the range, it's come back down. And now whether that's because of some flow we don't know, FTX estate stuff or whatever it is that keeps slotting at the moment it gets to the top of the range. But I don't know if the crypto market itself has much dry powder. Everyone's all in and waiting. You should keep your eye on stuff like Off the Grid, the new big game that's coming. It's on Avalanche. Okay, fine. Avalanche is not a chain that a lot of people use, but this game could be huge. That's a huge influx of people that we're not even looking at. And there's a bunch of the protocols who are building stuff like that. So it's like a mass market, abstracted away use of crypto that drives on-chain adoption, underlying value. So I think that's the other thing. It's not the obvious, it will come into the Bitcoin ETF and then flow through the market. It could come from a number of different places we're not seeing. Don't forget, at the moment the business cycle picks up a bit faster, it's slow across Europe, it's slow in the US. The forward-looking indicators are showing it going up. I mean, that probably ignites meme coins and brings a whole bunch of normies into meme coin casino, because it's just gamification of attention and
Community.
internet memes. I mean, they get it. And if their mates we've seen it before in every cycle, whether it's ICOs, if your mate is making a 50x, you are damn well opening an account and going to start trading because you can't bear.
Raoul addresses the social consequences of economic policies and speculative investing. He highlights a troubling trend: young people increasingly turning to speculative assets like Bitcoin because traditional investments no longer offer attractive returns. With high mortgage rates and collapsing home ownership rates among younger generations, many feel that investing in stocks with 8% annual returns won't secure their future. As a result, many turn to crypto as a way to bridge the wealth gap. Pal notes that wealth inequality continues to grow as those with capital accumulate more assets while those without fall further behind. This dynamic forces more people into speculative markets, hoping for outsized returns to secure their financial future.
The market is, in option terms, short the upside. If the market rips, it creates huge FOMO because there's so many people, the people I speak to, the family offices, the high net worths, the smaller institutions, the RIA networks, all of those capital flows are basically buyers from 75,000 onwards.
Yeah.
And 100,000 is blind panic.
Because that's their signal, right? Once the breakout happens, then we get in.
Because they're not traders, they just want confirmation that the thing is trending.
Yeah.
And they'll find the narrative will fit it. Price leads, narrative follows, and that will happen. So what happens is it kind of accelerates, which is why the banana zone tends to happen. It accelerates through those highs, and everything gets a little bit crazy because everyone has a total FOMO, and random friends of yours you knew from school 20 years ago start calling you up saying, well, I hear you into crypto. That's all to come. It's if the liquidity picture doesn't match what we're all expecting. The general thesis that I brought about was the fact that we need to refi the debts, and that liquidity has been cyclical and has been measurable, and we've got a huge amount of debt coming. Yes, GDP growth is decent right now, so that does pay for a lot of those interest payments, but interest payments are very high. So for some reason, not only the US doesn't provide liquidity, because if you go back to the 16-17 bull run, the US had raised rates once, went on pause, didn't do anything with liquidity. The Chinese did it all, and then the UK because of Brexit. And so it'd have to be all of them not doing anything.
Mhm.
But the Chinese have already made it clear they're
Yeah.
going to have to do something. So that's the difficulty I see is I don't see how nobody's going to do it. Because inflation's imploding in Europe right now. It's just the Europeans are going to keep going.
Yeah.
So, yeah, I don't know. That's the only thing I can see is for some reason that whole liquidity story, the cyclicality, doesn't work. But it's been working perfectly since the bottom in 2022.
Yeah. Yeah.
And really, when I look at the patterns and stuff with GMI, it's like I'm complaining because it didn't match last week versus, you know, really with a bit of wiggling around because of flows or whatever, whether it breaks out this week or in 2 weeks' time, 3 weeks' time, makes no difference. But it should be that order of magnitude in terms of time. It's like, it's right here, right now. It's equally dystopian in terms of what it does to people, but they don't see it.
Well, the wealthy get wealthier and the poor are getting screwed.
Yeah, and what it means is, you know, what is an asset? An asset is future deferred consumption. It's something you buy today. You get rewarded for locking up your capital by excess returns for the future, and for that you can spend it in the future. Now, what's happening is our future selves are getting poorer because you can afford less. The investment banker, you know, 25-year-old investment banker now can buy a fraction. Well, he can't even buy the house because you can't even get the mortgage on it anymore. So then you're missing out on that whole rung. And if you look at the stats of home ownership of 30-year-olds, it's collapsed if you compared it to 1983. All of the stats just show that they're just going to miss out on a big part of economic life, which is why so many people are driven towards speculative assets, because it's the only way of making it up. When you speak to somebody, I had this conversation today or yesterday, I'm like, you know, why don't you invest in the S&P 500? They're like, how much does it make a year? 8%. And they're like, I'm fucked. I'm never going to make enough money to retire or do anything. So therefore, they move to Bitcoin. Now what's happening, it's really interesting. Go and speak to a 33-year-old now and say, so, you know, I presume you're long Bitcoin for the crypto cycle. They're like, fuck that. 4x? Never going to make me enough money.
Raoul Pal's analysis offers a nuanced perspective on the intersection of macroeconomics, liquidity cycles, and the evolving crypto landscape. He sees Ethereum as well-positioned for long-term success, but acknowledges that other chains like Solana might outperform in the short term. He warns that liquidity constraints remain a key issue, but once the market breaks higher, the influx of capital will be overwhelming. The discussion also touches on the broader socioeconomic impact, with younger generations increasingly reliant on speculative investments to secure their future.
Please like and subscribe my channel.